Welcome to the Plan Your Federal Retirement podcast. I'm your co-host, Micah and with me is the legendary Tammy Flanagan. Tammy, how's it going?
Oh, you built that one up, Micah. I'm doing great.
You're my ace in the hole, by the way. Whenever I'm like someone's pushing back on me, if I'm speaking and whatnot, says, Mike, I don't think that's the role. I'll tell you what, I'll text Tammy and we'll get Tammy's opinion on this one real fast.
I do have a lot of experience. I've done this for 35 years. But there are people out there, believe it or not, who know as much as I do. They just aren't well known. And if you're looking for someone within your agency, they may or may not be that person. But there are some people out there that can help you with this besides me and Micah. But I'm glad we're here. And I think the synergy between you and I from the finance and tax mixed in with the benefits, I think it really does help people get a different perspective on some of these things we cover.
I love it. And one of the things too, no matter if it's something I say, something Tammy says, or somebody else says, feel free to question it.
Yeah.
We don't get offended with questions, by the way. If it's like, hey, I'm getting a little conflicting information. And this happens a lot during, I know it's not on our topic today, but military reserve time, buying that back to count it for your creditable service for civilian time. There's a lot of complexity in that one. And you can hear a lot of things from HR agencies back and forth. So question those things. This is your benefits. It's your money. We want to give you the most information you can so that you can make the best decisions for your retirement.
And the other thing I tell people is make sure, don't take anybody's word for anything, even ours. If you need something documented, we can provide you with a reference. If you're looking for something when you're moving into retirement, keep your documentation. Don't just say, I think I know I started on this date and I ended on that date. We need the documentation. I worked for the FBI way back in the 80s, and we always based everything on evidence, right? You got to have that hard evidence. So that's always going to help you in the long run. If you have it documented, if you have a record of it, that's going to beat anything. Because I've even seen, I hate to admit it, but I've even seen OPM and Social Security make mistakes.
Yeah, we had a case like that earlier this year with a client. And that was exactly it, as OPM gave them the wrong information. They're actually applying for a postponed retirement. So they were at 60, they had 20 years of service. They had postponed at MRA. They were waiting until 60 to apply. And when OPM personnel got the postponed retirement application, Tammy, they turned around and said, no, we're going to process this as an immediate retirement because that's what you should have done, but I can't back pay you for that. I'm like, whoa, this is not an immediate retirement. This is a postponed retirement. And they're like, no, I read it right here. And the guy was really nice, but he was like brand new to this. So we had a great guided discovery. And it was like, I can totally understand here reading this. However, let's look at some other rules here. And then he was able to process it as a postponed, but he was about to process it as an immediate retirement with a penalty, which that's even a different discussion. But anyway, so it's really important to know how these rules work.
Yes. And that's a good example of something that sounds so simple, but that is one of the most complicated retirements to process.
Yeah.
Especially when you're choosing that date you want it to start on. It's very particular and it's not really that well explained when you read the application. So what are we going to get into today that's not that well explained and understand?
I was like, that is a great transition to complicated, not really well understood. Let's jump into, Tammy, open season. I want to talk about open season with you because it is open season and we can go through that. So not only let's talk about open season, let's jump into Medicare as well. But there's been a lot of changes during this open season with FEHB, the Federal Employee Health Benefits Program. So touching on some of those and really touching on Medicare, there's a lot of questions that can come up about that. And anyways, that's what I think we're going to go through. Does that sound good to you?
Sounds good to me. And we are, you and I are in open season. It officially doesn't start till Monday, November 13th. And it's going to run through Monday, December 11th. So you have a full month. It's not a calendar month, but it's 4 weeks of time to figure out what to do. And this is good if you're listening to us now, because you've got the full 4 weeks to really figure this out and make some decisions. And if you don't do anything else, nothing else this open season, you have no interest in open season, but you got to do one thing. And that is look at the front of your FEHB plan brochure. I'm holding it up here. And right here, you can see there's a box on the front cover. It says important information, and it really is. It's showing you the rates for next year. And I've seen some plans, some of the HMOs are going up $175 a month.
Wow.
So if you don't think your plan is going up, look again, make sure. There's some that are actually going down a few dollars, not too many, but there's a couple. A couple are staying the same. So when we say the average increase is whatever 7.8%, that is irrelevant to you Because if you're in a plan that's going up 100%, who cares if the average is 7? So look at those rates, look at the changes for 2024. So even if your rates aren't going up, maybe the deductible went up, maybe the catastrophic cap changed. So look at that as well. And then finally, there's a summary of benefits in your plan brochure. Maybe you don't even know what the plan covers. We were talking about a pretty interesting benefit of one of those plans before we came on the air. And I bet a lot of people don't know that some of your federal health plans cover massage therapy. And some of them don't even require a doctor's referral, like the foreign service benefit plan. So you might have benefits you don't even know you have with the plan you've been in.
And Tammy, not just cover massage therapy, cover 50 paid massages a year.
Up to $75, right? Almost every week.
That is fantastic. You got to take Christmas off and Easter. There's your 2 weeks you got to take off, right? But other than that, that is fantastic inside of the benefits. So it's not just about being blessed with a great FEHB program. Now, I get to say that as the person on the outside looking in at how great your benefits are. So you do have fantastic, but you got a whole laundry list of benefits to choose from inside of that FEHB. And I think a really big missed opportunity, Tammy, is people don't really understand what coverage they need and what coverage they should have. They get comfortable with X company and it says, you know what, I've got X company. It's kind of pay the bills. I know how it works. I don't want to rock the boat. I'm going to keep this until I die or until they cancel the plan. And that's what they stick with. And that's an option, but we might want to encourage you to look a little bit past that.
That's right. Because we change, the plans change, life changes. So we do have to take a look at this every year, even if you like that plan family. For instance, let's say you're a really big fan, as a lot of people are, of the Blue Cross Blue Shield plans. Well, you've got 3 options. You've got standard option, basic option, and Blue Cross Focus. Maybe Blue Cross Focus is great for your son who just came to work for the government, but maybe you who's preparing to retire, you got to be in Blue Cross Basic because that's going to give you more comprehensive coverage, less out of pocket. Maybe you've been a law enforcement officer and have hearing loss, so now you need hearing aids. They give you a great hearing aid benefit. So you really got to look at the plan that's suited for your stage of life and your situation. What's your health issues? What prescriptions are you filling? It really does literally pay you to pay attention to this, because one difference between this plan to the next one can save you literally thousands of dollars per year. And that's not a little bit of chump change. I think that's quite a bit of savings.
So Tammy, let's run through real quick, just what are some of the big changes, not per plan, we can get into that in a little bit, but what are some of the big changes that we saw come out of OPM open season this year? And then let's kind of pivot into some plan information, maybe some planning opportunities with Fed, VIP, maybe HSAs, et cetera, then get into Medicare.
Well, there's quite a few changes, as is every year. Believe it or not, OPM does send out notices to all the health plans at the beginning of the year. It's called a call letter, and it tells them what they want them to emphasize for the coming year, what they might want to consider offering that's a really valuable benefit to feds. One of the things they've been noticing is that federal employees, especially in the earlier stages of their career, want coverage for things like maternal health and in vitro fertilization, which has really never been covered before. And so all plans now give you something in terms of that. Some are giving you more than others. For instance, Blue Cross standard option is going to give a $25,000 allowance for treatment. Other plans might just have discounted coverage. So you really got to look at those plans if that's something you need for next year, because there is some big changes there. Another thing is OPM wants to focus on obesity, not just in us adults, but also our children. And so they're trying to offer some extra benefits to help prevent and encourage people to find fitness and good nutrition. So there's a lot of things in your health plan brochures that may help you battle that obesity challenge. And I know I've been battling it ever since I turned 40. So I know there's others in that same boat. And we are also seeing a lot of changes with Medicare. Many of your federal health plans, even ones who weren't doing it last year, are now offering a Medicare Advantage add-on or an enhancement to the FEHB plan. Those are interesting. They're going to save you some money, but there's some little hidden factors there that we can talk about. So I want to make sure everybody's aware that there's pros and cons to adding a Medicare Advantage plan. But there's another benefit that anybody who's over 65 who has Medicare Part A and or Medicare Part B, you don't have to have both, you're going to be automatically enrolled in a Medicare drug benefit plan. They call it a PDP, a prescription drug plan. And that's a Part D. D as in David, D as in dog. It's a Part D Medicare plan for covering prescriptions. And that's automatically for everybody who's in that category. And I've been getting a lot of pushback from retirees saying, I don't want to be automatically enrolled in some federal, benefit that I may or may not want. So they're calling up their plan saying, how do I get out of this? Well, before you get out of it and before you say it's not good, really look at what it's doing. The reason why OPM made this automatic was because they felt everybody would benefit from it. It covers a larger class of drugs. It lowers the out-of-pocket expense you pay, and it sets a limit on how much you have to pay out of pocket. By law, there's now a limit if you're in a Part D plan. So OPM wanted our retirees and even active employees to benefit from that. The only downside to it would be those of us who might be in a higher income bracket. And you've got to pay those Aunt Irma, as you call them, Aunt Irma surcharges, which on the Part D plans can run anywhere from about $12, almost $13 a month, up to as much as $81 a month. And that's per person. So if you're not filling a lot of medications, you might want to take a look at that and opt out if it's costing you more than you're getting out of it. But on the other hand, many nice benefits under that, so something to take a look at. So those are some of the things you're going to see in your health plans for 2024 that you might want to take a look at. You might want to look at other plans and do a comparison.
Sure. And Tammy, to add to that, right, your IRMA, that doesn't just affect the Medicare Part D as in Delta drugs. It's the Part B as in Bravo. That's the bigger dollar amount there that you really got to be watching out for.
And that's always the big question, isn't it? To be or not to be?
Well, it's so much of our tax planning right now is Roth conversions with clients, capital gains harvesting, all these things. But that's a big thing, is saying underneath that IRMA bracket, because it can get painful when you start breaking those.
You're stuck with it then for a whole year just until you can lower your income.
So Tammy, let's say somebody was in a plan, they automatically signed them up for Medicare Part D as in Delta. There's no late enrollment period, right? Because the prescription plan you're in is a qualified plan or creditable plan. I forget their language they use.
Yep.
And so it's allowed, but they don't want it. And so what are their options that they have?
Yeah, they're getting kind of a little bit of a scary letter in the mail. At least I know Blue Cross sent out letters telling there was a deadline to opt out, which was actually the date before the open season even starts. So people are like, wait a minute, I'm getting ready to go out of town or something's happening. I can't do it. And they get on hold and they're holding for an hour on the phone.
Yep.
But keep in mind, if you miss that deadline, it's not the end of the world. You can still opt out. In fact, Blue Cross has in their brochure about the prescription drug plan, they have in there saying that you can even call Medicare and drop out. You can call Centers for Medicare and Medicaid Services. So I would suggest check your plan's website, or if you have a plan brochure, you can see the plan brochure online. Look in there. It's going to tell you what you can do. It's going to give you some details about that plan. I found more information on the websites than in the plan brochures on these new Part D plans, but they're in both. Also, you always have an 800 number to call. So if you're in a particular plan that's offering this or enrolling you in this benefit, give them a call. If you have questions about it, they'll be happy to answer them. This is new. We've never had this before. This is something that retirees are like, what do you mean? They've always told us we don't need Medicare drug benefits. Now you're telling us we're automatically getting enrolled in it. Well, there was a law, what was the name of that law? It passed a couple of years ago. It says, I can't think of the name of it. But anyway, as a result of that law, that's why OPM is doing this, because that new law is setting these limits on seniors, seniors like me, how much we have to spend on our medications, because they're finding statistically a lot of people aren't filling their medications because they can't afford to. So they're trying to find ways to stop that from happening, to allow people to retain their health and get better if they're sick, and not forego taking these important medications that could really help them.
Well, Tammy, before we do a little bit more of a dive into Medicare, I know one of the things that was kind of big is Humana is no longer inside of the FEHB program, correct?
Yeah, so up until this year, last year, there was 174 different plans and plan options within FEHB, which is, in my opinion, far too many anyway.
Way too many to choose from.
But now I think we're down to 157, 158, because Humana was active in a lot of different states. It's an HMO. It only had a total of 10,000 enrollments in all of their options. So losing it is not a major blow to the federal health plan, but if you're an Humana participant, you've got to find a new plan for next year. Because if you don't, you're going to be automatically enrolled in the GEHA Elevate plan, which may or may not be the plan that you want. So
Right.
it's going to pay you to do a plan comparison for next year to figure out what plan is really, this could be an opportunity. I look at it as an opportunity to find a plan that's really going to work best for you. So I would take a look at that. Humana, there's also Aetna Open Access. If you're in Kansas or Missouri, it's leaving those areas. Aetna Open Access is not leaving FEHB, just that particular region. NALC used to be, I think it was one of the least, if not the least expensive federal health plans, their value plan option. Well, you're not going to have that next year. So if you're in NALC value, go find another plan. You might want to look at Blue Cross Focus. You might want to look at the GEHA Elevate plan. These are all the lower cost value type plan options that you can choose from, but no longer in NALC. One other big thing, I don't know how many postal employees or postal retirees are listening, but of course they're most likely aware of this, but they may not be aware of the details. The Postal Service Health Benefit Program, which is going to be a kind of a subsidiary of FEHB, that's going to start up in January of 2025. So we have another year before that goes into effect. So postal employees, postal retirees don't have to do anything different for the 2024 plan year. You can stay in the same plan. You can move around just like you did before. Prices stay the same as far as, postal employees go. But next year in 2024, starting in April, if you're a retiree who said, I don't need Medicare Part B, and now here you are at age 85 saying, man, I wish I had Medicare Part B, postal retirees are having a unique special enrollment period. It's going to run from April 1st to September 30th of next year. So you don't have to do anything open season. But starting April 1st, you can jump into Medicare Part B with no penalty. It's like the greatest gift ever if you're somebody who waited 20 years and now you have this once-in-a-lifetime opportunity to jump into Part B with no late enrollment penalty. Because typically, if you waited 20 years, you couldn't afford it. Because it's a 10% per year on the standard premium late enrollment. And the standard premium is $174 a month. So every year that you've delayed, that's tax on another $1,740. So no late enrollment penalty for those postal retirees. Now, again, many of them don't have Part B and don't want it, and they don't have to take it. But hey, if it means you pay nothing out of pocket when you go to the doctors or the hospital or lab work or physical therapy, I would look into it.
Tammy, I was just talking with a client, and it was kind of that scenario right there is they weren't excited about getting into Medicare Part B, to say it lightly, right? They're like, this is ridiculous. I'm paying so much more. All the understandable arguments and concerns. And one of the things I tell my clients, and I don't have a stat or somewhere in the book that I can find that says this is the number, but I tell my clients, it says, look, if you don't wish to enroll in Medicare Part B, there's going to be a time where you have larger medical expenses that may not be covered, and it's going to be $10,000 to $20,000 out of pocket. And if you have that money and you don't wish to enroll in Medicare Part B, okay, well, then that's kind of that risk that you're taking. But the benefit to your point about signing up for it is, yes, you have the premium. There's the downside. However, your out-of-pockets go to almost zero on a lot of things. And so now all of these things are covered. So instead of paying for it randomly as you see the doctor, now you're paying for it on a monthly basis. Pro and a con, I totally get that, but be really hesitant before you don't enroll in Medicare Part B as in Bravo.
Exactly. I totally agree with that. I think it's a little short-sighted, but I don't blame the participant because they don't really see the long picture on this. When you're 65, hopefully you're still in good health. Hopefully you're still taking those cruises and trips across the ocean and doing all the things you want to do. You're still very active. Maybe you're running the New York Marathon, who knows? But 10 years from now, that may not be the case. 20 years from now, that's probably not going to be the case. You may have another 40 years of life left after you turn 65. And the fact that you have no out-of-pocket medical expenses when you combine Medicare Parts A and Part B with not most, but many of your federal health plans, that's a truly wonderful benefit that you're getting for very little extra cost. Because like you said, Micah, yeah, you are paying for Part B, which next year is $174.60 a month per person.
Yep.
Yes, that's an additional premium. But now you don't have to be in that same health plan you were in this year, because now you're going to combine that with a plan that really caters to retirees who have Medicare Part B. You're going to look at Aetna Direct. You're going to look at GEHA high or standard option. You're going to look at Blue Cross Basic rather than Blue Cross Standard. So every plan family has one plan within that family that really caters to retirees who have Medicare, which means they're going to give you money back. Some plans will give you $100 a month back on your Part B premium. So now instead of $174, it's only $74 a month. Most plans that have that benefit will waive their own deductible, copay, and coinsurance. So Medicare's primary. Once you're retired, the federal plan picks up the rest. So those things are wonderful benefits that are very hard to put a dollar value on because you don't know what the future holds.
Well, Tammy, let's take a step back real quick and talk about things before Medicare. We have a question from Maria that came in, so I like doing the live, like seeing your guys' questions, so thank you. Is HSA available for federal employees to sign up? So let's talk about high deductibles and HSAs.
Oh, one of our favorite topics. Because this has a benefits component and a financial planning component.
Amen.
So let me start with what is an HSA and how do you get one? So an HSA or health savings account sounds a lot like flexible spending account, and it has some similarities, but it's very different. An HSA is a bank account. It's FDIC insured. Your federal health plan that offers this is going to be a high deductible health plan. So you'll find 4 or 5 of them throughout the FEHB, including GEHA, Aetna, Mail Handlers Benefit Plan, or MHBP. Those are 3 off the top of my head. I think not Blue Cross, but there's one called Blue Choice if you're in the DC area, metropolitan DC. So look for those high deductible health plans, and they'll establish for you an HSA or a health savings account with the bank that they use. Like GEHA uses HSA Bank. Aetna uses a bank called, I think it's called Payflex. So you'll get that information once you sign up for the plan. Now, this HSA is a really wonderful benefit, isn't it, Micah?
I think it's fantastic. So one of the things I like about the HSA, let's compare it to the FSA real quick. The FSA is a spending account, right? You have to spend that money. It's use or lose. There's a little bit of a carry forward, which is great, 600 and change, right? However, it's use or lose money. And HSA is a savings vehicle. So we get to put money in there pre-tax. I get a tax deduction for any HSA contributions. You can also invest that money. So I always recommend keeping your deductible, maybe your out-of-pockets, in cash. Anything above that you're saving money into, Tammy, in HSA Bank or anywhere else, they have a Schwab platform now. It used to be Schwab bought TD, so it moved over. You have a Schwab platform that now you can invest that money in a brokerage account. So that means you can start investing. And so I got a tax deduction for putting money in there. I get tax deferred growth on any of that money. It's going to grow over time. Then if I pull it out for any qualified medical expense, it's 100% tax free. This almost turns into like this mega Roth IRA that you get to save and build for medical expenses in the future. So it's a fantastic tool that I think not enough people look at. And especially if you're younger and you're fairly healthy, by younger, I mean below 65, because at 65, we kind of can't do it anymore. So if you're under 65, it could be a really good option for you to review.
I have a friend of mine who's over 65 and she's under the old civil service system. So she doesn't even qualify for Social Security retirement. So she can pretty much take herself out of Medicare A and Medicare B. So she's just continuing on.
Fancy.
She's single. She doesn't have anybody else to worry about. So she's in her HSA account, fully funding it every year, putting aside a ton of money so that if health problems come up in the future, she's got this tax-free account to pay for them. So she's not really spending any of that money. And this coming year in 2024, the maximum HSA contribution, because this is an IRS rule, there's a limit of $3,850 if you're in a self-only plan. That's how much you can throw into that HSA. If you're self plus one or family, it's
8,300. The new rule is, I think self-only is 4,150, and then the family rule is 8,300.
That's right. I was given the 2023 amounts. So yeah.
Well, good news, you can still make those ones if you hadn't made those contributions this year, right? If you're in a high deductible plan, you can still open up an HSA account, make those contributions for this year, and get ready for next year as well.
Absolutely.
The other part that's really nice about this is there's a pass-through credit. So we have to choose a high deductible plan. And if I'm not mistaken, you like the GEHA plan.
Yeah.
And that has a pass-through in the premium. So they actually give you some of your own money back to the HSA, right?
They do. They do. So if you're in self-only plan, they're giving you, what is it per year? $900 a year. And if you're in a self plus one or family, they give you back $1,800. They divvy it up monthly. So divide that by 12 months.
Sure.
Every month you'll see a contribution go into your HSA account that you didn't make, but the health plan made. And this is true of all of the high deductible FEHB plan options, but GEHA has a really reasonable premium for next year. I'm looking at it right now.
It's at $170 for single and then $396, almost $400 for family.
Well, let's see. The high deductible one is actually $154 a month. This is per month. For single, and for self plus one, it's $332, and for family, it's $409. So that's the high deductible plan for next year. So really reasonable rate, about half the cost of Blue Cross Standard, just to give you a comparison. Plus, they're giving you back $900 or $1,800 towards your HSA account that's tax-free gross, tax-free going in, tax-free coming out. And we've had this, I don't remember when my husband and I signed up for a high deductible plan. This was well before I turned 65. So I'm using that money I saved in there to pay my Part B premium. So it's just coming out every month paying for Part B because I haven't claimed Social Security yet. So I thought, I don't even have to look at that Part B premium. It's coming right out of that HSA every month automatically. So you can use it for that. You can use it to pay for long-term care insurance, or just keep saving it and letting it grow. It's growing tax-free. I probably shouldn't be touching it, but I can't. I always let money burn a hole in my pockets. I got to find a way to spend it.
Yeah, there's some really neat rules around the HSA that we've done other podcasts on, really get in depth in those. But it's a fantastic savings tool. So it's definitely something that you should be looking at. Unfortunately, when you hit 65, the contributions into that stop because you go under Medicare, right? Now, in the exemption that you don't have to go under Medicare, then that's a different rule. But if you're under Medicare or under TRICARE, you're not eligible for this because you no longer have a high deductible account. So some of my military retirees, like reserve retirement, kicks in at 60 and they get TRICARE at 60. They forget about this and they want to keep their high deductible plan, but it doesn't work because TRICARE comes in and TRICARE is not high deductible. You're now ineligible to contribute. The cash that you still have in there, you can still use. You can still pull out for qualified expenses. You can still invest it. That's still your money. You just can't add to that pot of money anymore.
That's right. And if you change plans, if you go to any other plan that's not a high deductible plan, that money is still in that account. So you're not going to ever lose it. It's your money. It belongs to you. So it's not like FSA where, if you don't contribute next year, well, everything's gone. You've lost it. It's not the same way. I can't say enough about these plans because every time I talk about them in seminars, at first people's eyes glaze over. Oh, I don't want to hear about that high deductible. They really didn't do a good job naming those plans because who in the world in their right mind would want a high deductible health plan? But when you talk about the other benefits of having that higher deductible, it's really a lower deductible when you consider the tax breaks, the lower premiums, and the fact that you can set aside money for the future. I think there's a lot to like about them if you're eligible to make those contributions.
Yeah, it's really important to be evaluating those, right? And just kind of looking at those, et cetera. I agree. By the way, I'll tell you how good your health plan is. Your, quote, high deductible health plan in the federal market doesn't even come close to what I pay in the marketplace for my high deductible. So your high deductible is not even a low deductible in my plan.
No, that's true of anybody in the marketplace, just about. Even my son has a marketplace plan, and he's young. He's 38 years old, but yet not that young, but you shouldn't have to pay such a high deductible, but he had a snowboarding accident last year. He had to pay $5,000 out of pocket.
Yep.
It's like, guess who had to help?
So that's the nice part about these, plans that you have inside the federal system is they work really good. Hey, Tammy, this podcast is all about action items. And so I want to go ahead and pivot to some action items today. I'm going to say number one is let's go ahead and take a peek at an HSA or high deductible account, right? If you are under 65 and you're eligible, so it's not on Medicare, not on TRICARE, and you have an option of moving to a high deductible plan, why don't you give that a shot? Go look at it and go pull your EOBs, your explanation of benefits for the last 12 months, and say, hey, if I move to a high deductible plan, how much would it really cost me? Yes, you have the deductible, but you're getting a lot of that premium you're paying back. Your premium's lower, number one, right? Because Tammy, as you said, the premium was only roughly $400 for a family plan versus in Blue Cross, Blue Shield for the standard family plan, you're paying what, $650 and change? So
more.
the premium is less and you're getting $150 of that back towards your HSA account. Really look at that math, put pen to paper and see if it makes sense for you.
Yeah, for many people, it really does. I agree. During open season, do plan comparisons. If you go to OPM's website, click on the insurance link there at the top of the page. From there, click on healthcare, because we're not talking life insurance today, we're talking healthcare, and then plan information. That's where you're going to find a map of the United States, including Alaska and Hawaii, and it's going to tell you what plans are available where you live. And then there's a plan comparison that OPM has done for you. And there's also a link to the checkbook guide to federal health plans. Stack up your 4 top choices side by side. See which one covers massage therapy. See which one covers chiropractic care or whatever it is that you and your family need. See how they compare, not just in premiums and deductibles, but other benefits. Some plans give you some dental coverage and vision coverage.
Sometimes, Tammy, when we get into this, you're like, oh my gosh, that's so much work. I don't want to compare plans. I'm not like Mike and Tammy. This isn't fun for me. I don't do this on Saturday mornings. But look at it from a bit an hourly rate perspective, right? How much an hour do you make, right? Kind of jot that number down. Then let's say you spent 2 hours, maybe 3 hours on the high side and reviewed this, but it saved you thousands of dollars a year. And let's just say for 10 years, let's say it only saved you $2,000 a year, but now this changes in effect for the next 10 years. That's $20,000 of savings for 3 hours of work. That's a pretty good hourly rate right there, if I'm not mistaken. So really look at this and say it's probably worth your time because of how much it's going to save.
Yeah. Yeah, I think we spend more money on spending money, like taking a vacation. We spend hours comparing the prices of going here and going there. Or even I can be on that shoe website for literally hours comparing one shoe to the next. And I'm not saving a dime. I'm spending money. So this is something that's definitely worth your time. Everybody should really look at this as a required assignment. You've got to do this during open season because you just never know. I've seen, like I said, I've seen some plans gone up over $150 a month. So make sure that's not yours.
Tammy, I was totally missing it. I'm sorry. You said shoe website. I was like, wow, there's a different website to compare these benefits. Oh, nope, that's not what you were talking about.
I'm talking about buying a pair of shoes.
Awesome. Well, podcast is all about action items. Make sure you take this and do it. We have a goal of helping another 1 million federal employees with their retirement. We can't accomplish that without your help. We love your feedback on the live podcast. Do you like it? Do you not like it? So we can help and grow would be fantastic. And click the share button. Send this out to other federal employees. Get this message out. These are your benefits that you've earned, and we want to make sure you get every penny you can for your retirement. Until next time, happy planning.